Good evening and welcome to the Strategy of the Week for Friday, November 1st, 2013. My name is Glenn Tompkins. I'm the manager of internal training here at VectorVest, and I'll be taking you through tonight's presentation. This week's strategy is called CHAPPELL'S CP, a great cherry picking technique. CP stands for cherry picking. Cherry picking is a fantastic way to make money in the market. You find stocks that are exhibiting specific characteristics you want and you buy them. This kind of technique puts a lot of power in your trading. Steve Chappell, the Director of Education, gave an excellent strategy presentation on September 6th of 2013 in which he showed this technique. Let's get into the program so we can discuss what he did. From the home page, I'm going to go up to the Viewers tab and click, and we're going to go look at the stock viewer. We're looking at today's close, and we're looking at the top 20 stocks sorted by our master indicator VST. This is the value safety timing vector, and it's the bread and butter behind what VectorVest is all about. Even though we track over 8,000 stocks, all of these stocks are sorted, so the best combination of value safety and timing is at the top of the list, sorted all the way down. What I want to do is I want to look at a graph of the top 20 stocks. So we're displaying 20. I'm going to click over here. And I'm going to click where it says graph 1 and change it from 1 to 20 and click on it. We're going to start off with the default layout graph that you see here. But what Steve did in his presentation is he used the Midas Touch layout. He also moved the graph from a 1-year graph over to a 3-month graph. And what he was looking for in this case is for some moving averages to be hitting new highs. When you're looking at the Midas Touch, we have a couple of moving averages on the stop price of the stock. If I scroll down, we have a 10-period moving average and a 65-period moving average. Being that we're looking at end of day, this becomes a 10-day and a 65-day moving average on the stop price of stock. Down below, we have a moving average, a 40-day moving average on RT. What we're looking for is for the 10 and the 65-day to cross above each other, but we want to see them at new highs over this 3-month time period. And what Steve did is he looked to see if that was happening, and he also wanted to make sure that the RT was hitting a new high over the last 3 months as well. And if all three of those were in action, we were going to take advantage of buying those stocks. And what Steve did is he very quickly went through to determine what stocks we wanted to cherry pick. So by looking at that, you notice that AMR, the 65, is not at a new 3-month high, even though RT is, and the 10 period is pretty much right at that high. If we go to the next stock, this is not a stock that we would want because the 65-day is not hitting a new high. RT is, and it looks like maybe the 10-day might be close to its high as well. So this, again, wouldn't be a candidate. We'd scroll down. This is exactly what you're looking for. The 10 is hitting a new 3-month high. The 65 is hitting a new 3-month high. And RT is hitting a 3-month high as well. This is the stock that you would cherry pick and you would buy given the market's conditions are conducive to the stock's price continuing to move up. You go to the next one. Canadian Solar probably would not be a candidate. Libertor Medical, no. But if we look at US Truck, that would be a candidate. Look at that, folks. That's exactly what we're looking for. We go to the next one, Alaska Air, also a candidate. ITT, looks like it is also a candidate as well. Shoo, look at these stocks. Perceptron is another candidate. PriceSmart, another candidate. Bitiatu, also another candidate. eHouse China would not be because the RT is not hitting a new high. The cool thing about this is no matter what, we want RT to be on that rise and hitting new highs over the 13 weeks because stock's price is what pulls the RT higher. If the stock's price is moving higher, RT is going to be moving higher to let you know that the stock is in a bona fide uptrend. It is a very powerful indicator that you'll only find within the VectorVest program. And we can quickly just scroll through all of these stocks to discern which stocks are the candidates and which ones aren't. And this is the way you cherry pick, folks. And you can very quickly see which ones you would get and which ones you would not. Now, let's say we've created a search that's going to find this information out for you so that hopefully you won't have to look through the graphs. Let me show you what I mean. If I close this out, and just to let you know, on that graph layout, everyone has access to the Midas Touch layout, so you can do this anytime you want by going to the top 20 stocks, looking at those graphs using the Midas Touch layout to cherry pick which stocks you want. But we're going to go to the Unisearch tool, and in my SOTW folder, I've created a new search that Dr. Lito gave me this morning called CHAPPELL'S CP. As of tonight, everyone should have this in their program under the cherry picking folder, and it will be called, again, CHAPPELL'S CP. Now, even though everyone has access to the Midas Touch layout, in order to do searches using moving averages, you have to have an add-on module called ProTrader. You'll notice that tonight we've included a link that will offer you the ProTrader tool or the add-on module for a free 2-week trial. So you can take advantage of it. But I needed to show you that you don't have to have ProTrader to look at the graph and look at the Midas Touch to cherry pick on your own. But we're looking at a 3-month time period. So in this search, we're saying 9 weeks ago, the stock 40-day moving average on RT is greater than it was 13 weeks ago, or that 3-month period. We also want 5 weeks ago, the stock 40-day moving average RT to be higher than it was 9 weeks ago. Folks, do you see that we're trying to build momentum on RT to make sure that the stock's RT is hitting a new high? 2 weeks ago, the stock 40-day moving average on RT is higher than it was 5 weeks ago. And 1 day ago, the 40-day moving average on RT is higher than it was 2 weeks ago. So what we're definitely doing, if nothing else, we're establishing that the RT is definitely hitting a new high over that 3-month time period. And as I mentioned, if RT is moving higher that way, the stock's price is moving higher, pulling that RT higher. If we scroll down a little further, we added some other parameters to make this search derby ready. The stock's price actual is greater than $1. The average volume is greater than 100,000 shares to ensure liquidity. The stock industry group not equal to ETF short, and the 10-day moving average on RT is greater than the 40-day moving average on RT. And this is sorted by VST, our bread and butter. So when we find the stocks that are exhibiting this characteristics, we want to sort them so that the best stock by VST is at the top of the list, sorted all the way down. So what we're going to do is we're going to run the search as of today's close. And let's take a look at the stocks that were found. We're going to highlight the top stock, hold the shift key on the keyboard, and click on the last stock. This is going to highlight the top 10 stocks that we're showing here. We'll right click in the yellow area and we'll click on View Stock Graph. Here's that layout again, and what we're going to do is again move it from a 1-year graph down to a 3-month graph, and let's see if the search is doing what we want it to do. Well, by Jove, it surely is. Alaska Air, 10-day moving average on the stop price and the 65-day moving average on the stop price are hitting a new high over the last 3 months, and the RT is as well. Folks, we now created a search that finds you the stocks that you automatically want to cherry pick. If we go down to the next stock, look at this. All right, the 10 is above the 65, hitting new highs. Bituatu is sitting right flat as far as the RT goes. We'll go to the next stock. Walgreens, man, look at that. That is a beautiful thing. We'll go to the next one. Folks, how much easier does it make it for you to now have the stocks that pretty much will fall in line for what you're looking for? McKesson Corp, the RT is hitting a new high over the last 3 months, as well as the 10 and the 65-day on the stop price of the stock. Folks, we've just made life so much easier for you than having to just look at the Midas Touch. You have the power with the ProTrader tool to run the search and do that for you. In this case here, the 65-day is not hitting a new high, but look at that RT. Remember, the stock's price is what pulls the RT higher. So I can still look at this and jump on board with it because you notice that the majority of the stocks are doing exactly what I want them to do. We've created a search to do that for us. All right, here's another situation where the 65-day is not hitting a new high, but that RT definitely is. You'll notice that the search parameters were primarily built around the RT, making sure that it is hitting a new 3-month high. And that's what the most important part here is when you made the search. If we continue to scroll down, you can see that the majority of the stocks out of the 10 that we found are doing exactly what we want them to do. So again, just to recap, you can look at the Midas Touch graph layout and look at the top, how many ever stocks you want to cherry pick, or better yet, you now have a search designed to find you the stocks that are exhibiting the same kinds of characteristics. Now, the next thing we want to do is we want to take a look at this and test it to see if this has any merit. So what we're going to do is we're going to close out of this, and we're going to go to the back tester. We're going to go up to the tab that says Backtester, and you'll notice that I've already created a backtest that's called CHAPPELL'S CP. What I'm going to do is move this down and concentrate on that real quick. What I'm going to do is highlight it. As you see, it's already highlighted, and I'm going to click on Edit. Let's take a look at what we've created. The account settings, initial investment $100,000. Commission type is $9.95 per trade. We're not going to use margin. But what we will do is we're going to be using market timing when we set up this back test. Well, this now brings me to my next point. In order to use market timing in your back test, you have to have another tool called the auto tester, which is also a one-time fee, but we've given you a link to give you a 2-week trial to this. Now, before you complain that this is another add-on module that has to be used in the program and why are we doing a strategy that talks about that, I'm going to show you how you can do this without the auto tester as well. So just bear with me, all right? Let's go to the automation rules for up. The strategy we're going to use is CHAPPELL'S CP. The stop criteria we're going to use on this is going to be a 50% gain, 10% loss. We get into the most trouble when we allow our losers to get away from us, and then we start making silly mistakes that dig us a bigger hole. So we're going to cap our losers out at 10%. This affords us the opportunity to live to fight another day. We're not going to be too greedy, but if a stock goes up 50% based on those criteria we're looking for, and given the market's conditions, if the market is still moving up, I think it'll be pretty easy for us to hit that 50% gain. If I can do that consistently over and over, do you not think that we would be happy traders? I think we would be. But that 10% to the downside makes sure that we cap our losses pretty quick. If we move over to more settings, this is another cool thing. We're going to try to maintain 20 positions. Now, why is that? Because with 20 positions, I'm going to ensure that I've got some diversity within my portfolio. Diversification is a very important thing, especially if you have a lot of money in the market. So I'm going to try to maintain 20 positions. I will automatically replace closed positions, and I'm going to dip my toe in the water, and I'm only going to try to open 2 positions a day until we get to our 20 positions. So how does that work? Well, we're going to use the green light buyer. What that means is we look at the color guard on the home page, and every time we see a green light in the color guard pricing column, that will be the day that we either purchase stocks or we replace stocks that have closed out in our portfolio. And we're only going to try to buy 2 positions a day. So we have a nice diversification within our portfolio, and we're not overloading our portfolio with a ton of stocks all at one time. Here, we're also not going to close any open positions. You'll understand what that's all about in a second. We're going to invest the average value of the portfolio. We will be using odd lots, and we're going to limit repurchases, not to buy stocks for 90 days after the sale. Guess what? This more than makes up for the wash rule. So 90 days, if we close out of a stock, we cannot repurchase it for 90 days. If it shows up on that list, it'll go to the next stock, but it has to wait 90 days before it goes to repurchase a stock that we closed out of. We're going to check the box that says don't buy if stocks violate the stop criteria. We're also going to have a maximum percentage of the stock's average volume at 10%. All right, let's go to the next part, which is the automation rules for down. Because in using the green light buyer, we have three situations. We have a green situation, which is the green light in the color guard pricing column. It's okay to buy or replace stocks. We have a yellow situation where we don't have a green light in the color guard pricing column. Yellow means we're not going to do anything. And when we get a confirmed down call, that's the time when we're going to close out of all of our stocks. So when we get a confirmed down call, but in this case, we won't get out. We're going to take no action. What this allows us to do is it lets our portfolio extinguish itself if it has to, and it lets the stops manage the portfolio on its own. So in essence, folks, we're pretty much going to be long all the time. We're going to let the stops manage our portfolio. And again, on the neutral, we're not going to do anything as well. The test period we're going to use is from 12/31 of 2012 all the way up until current, or 10/31 of 2013. Pretty much we're testing year to date. So coming from the first day of the year all the way up until now, which is almost a year, and we named it CHAPPELL'S CP. So what I'm going to do is click on Finish. I'm going to bring this back up now, and let me show you, if you don't have the auto tester, how this will work. So if you set the back tester up, you update it on a day-over-day basis. So here we're set on 12/31 of 2012. If I click on that date, let's go see what the color guard said on that date. On that date, 12/31 of 2012, we do have a green light in the color guard pricing column. So what does that say? That means on the next day's open, we can purchase stocks because we did get a green light in the color guard pricing column. All right? That's how the green light buyer works. We'll close out of it. We'll move this up one day. Because we know we can buy on the next day, if I click on Run, it should show me that on that day, it purchased 2 stocks. And let's take a look at them. There we go. On 1/2, the day after 12/31, we bought 2 stocks. You'll notice that it says pending orders 2. Well, why is that? If we go to 1/2 and look for the views on that date and scroll down, we have another green light in the color guard pricing column. So we can buy stocks, but guess what? The system is telling us what stocks we can buy, and here they are. We're going to buy 104 shares of URI, and we're going to buy 649 shares of PPC. Man, how easy is that? So we put in our orders with our broker, and we place the order for the next day. All right, let's go up one more day. We'll click on Run. So we should be holding 4 stocks, and we are, because we're only buying 2 stocks on a green light. You notice that on the day of 1/3 of 2013, we have no pending orders. I wonder why. That's because we have a yellow light in the color guard on that date. Let's take a look. There we go. 1/3 of 2013, there's a yellow light. On the yellow lights, we do not buy stocks. If we've closed out of positions, we do not replace. We only buy or replace on the green lights within the color guard pricing column. So let's close out of that. Folks, how easy is this? You come home every night, you update this on a day-over-day basis if you don't have the auto tester. We'll go up one more day to 1/4, click on Run. We're still holding 4 stocks. There's no pending orders. Why? Because we're still in a neutral situation. We'll go up another day, which is to the 7th. We'll click on Run. We're still holding 4 stocks, and during this time when we're not purchasing any stocks, we're letting the stops manage our portfolio. Let's take a look at the stocks that we do hold. All 4 of those stocks that we're holding are up. One of them is up 15.47%, and the one that's up the least is only up about 0.4%. But the stocks are being managed by the stops, and we're only buying on the green lights. We'll go up one more day to the 8th. Still holding 4 stocks, no pending orders. We still have a yellow light. We'll go up to the 9th. 4 stocks. Now we have a pending order for 2 stocks. Why? Let's go to the views on the 9th, and we'll scroll down. There's our green light in the color guard pricing column. That means it's okay to buy stocks. So folks, even if you don't have the auto tester, this is not a difficult thing to do. And I wanted to show you this, that you don't have to have the auto tester to do it, but I'm going to show you how it can help you. I'm going to set this up to go all the way to the end, which is 10/31 of 2013. With the auto tester, all I have to do is set this up, click on run. And when that happens, I let the auto tester do all of the work for me. Okay, through the magic of time lapse, let's take a look at this. Let's move this up a little bit. We made 50.33% in a matter of less than a year, which is annualized to over 60%. And look at this. We only have a drawdown of 7.37%. Now, as I mentioned, you only buy or replace on the green lights. You sit and wait during the neutrals. When you get a confirmed down call, what we're doing is we're just holding the stocks that we may own during that time period, letting the stops manage the portfolio, and we wait for the next green light and we rinse, wash, and repeat. Folks, look at that equity curve. And to get a gain of 50.33% based off of a $100,000 portfolio in less than a year is pretty darn good with a less than 8% drawdown. Now, as I mentioned, do you have to have auto tester to do this? No. Does it help you? It sure does. In regards to looking at the stocks to cherry pick from using the Pro Trader, does Pro Trader help you? Yes. Do you have to have it? No. So we do talk about add-on modules. Folks, you need to look at them as enhancements. They're not necessity, but they are enhancements to help you right along the way. So looking at this, I wanted to compare this test based upon what has happened with the Dow, the NASDAQ, and things of that nature. And let me show you what I found. Test results from 12/31 of 2012 all the way up until current. Chappell's CP made 50.33%. Over the same time period, the VVC, which we look at as the overall movement of the market, made about 20%. The Dow over that time period made just a little bit less than 19% at 18.63%. The S&P 500 made 23.16%. And the NASDAQ did the best out of the indices, making 29.81%. So folks, we've taken cherry picking to another level for you. Not only can you go and cherry pick by looking at the graphs on your own, but we've tried to make it a little easier by creating a search that will find you the stocks that are exhibiting the characteristics that you want. And now you've gone back and you've tested it. And again, I've shown you that you can test it with the auto tester. Makes life easier for you. But if you don't want to, you can do it on a day-over-day basis without the auto tester as well. With that, I'd like to say thank you for joining us for the Strategy of the Week presentation. And PS, which stands for Postscript, we're going to have a live Q&A webcast on Monday at 2 p.m. I'll be there to answer any questions that you may have in regards to the Strategy of the Week. If you want to register for that webcast, you can register at www.vectorvest.com/events. Hopefully you guys will be there again to answer any questions that you may have about the Strategy of the Week. Thank you very much for joining us for this presentation. If you ever have any questions, give us a call. The number is on the screen here. We'd love to hear from you. And keep in mind, the Strategies of the Week are designed to give you ideas to help you to use the VectorVest program to be profitable in the market. Hopefully some of you will see this, tweak it, make it better. And if that's the case, that is awesome. And we hope that you do. But with that, thank you very much for joining us. Have a wonderful evening.